Hello, Theo traders. This is Gianni DePoce, and today is the 23rd of April, 2024. And I'm really looking forward to reviewing some charts with you today, especially in the currency market, because I've been monitoring some events that are unfolding, especially when it comes to the Japanese yen and the Bank of Japan. And I think we're close to a moment of significance occurring. I also want to talk about what's happening in the stock market because despite closing out at the lows on Friday, we've seen a nice bid to start the week. And so we obviously have to digest the inflation numbers of Friday. But so far, I think it's encouraging at the fact that stocks may have found a temporary bottom. And my title in last week's video is, do you have the courage to buy the dip? And I still stand by that stance. Now, it's not as as strong as a situation with respect to the technicals as it was last week since we closed at the lows, but I am encouraged by what I'm seeing thus far. So let me start off by looking at USDJPY, and then we'll look at what's happening in the euro against the Japanese yen. So simply put, I think the carry trade is only amplifying here because the Bank of Japan stubbornly wants to keep their negative interest rate policy for whatever reason. Now, last week we had some Bank of Japan officials state that they were thinking about tinkering with their negative interest rate policy, but I think the market right now is calling their bluff. You're seeing USDJPY consolidate near its multi-decade highs, and until the BOJ does what the market demands, and that is to end their NERP program, I think we're going to continue to see the Japanese yen weaken. And so if you take a look at the euro against the Japanese yen, what you'll see is that it looks like we're finally starting to see a breakout in this pair as well. And so that's the prevailing story in the currency market is Japanese yen weakness. And that reverberates across the entire financial market landscape. And I'm not really as concerned about this happening right now. What I'm more concerned about is the unwind. If the Bank of Japan, I should say, when the Bank of Japan eventually abandons their negative interest rate program, I would look for the Japanese yen to appreciate significantly. And there will be funds, groups, individuals that inevitably get burned. And I think that could reverberate across the entire financial landscape, affect commodities, stocks, bonds, so on and so forth, and could be the catalyst for a major crisis later this week, or not later this week, if only later this year. So keep an eye on that because it could be a major event and potentially lead to stocks experiencing even more volatility than we've seen over the last couple of sessions. You can take a look at the S&P 500 here. It fell to a low of 49.63 in the June contract futures on Friday, but ever since then, it's pretty much been straight up. And you're seeing technology lead out of this low. I'm still a bit more in favor of setups in the energy space, but this is definitely encouraging to see coming out of this low. And you'll see that the NASDAQ is leading to the upside. That is an encouraging sign. And you're seeing chips outperform the semiconductor sector outperform here on Tuesday as well. And, last week, NVIDIA closed out at the lows, and it was starting to be written off by numerous pundits and individuals. And if you take a look at the RSI indicator here, it didn't even fall into oversold territory. So, heaven forbid that a stock like NVIDIA that is, effectively more than doubled since the fall retraces, 200 points or more from its high its all-time high that it registered back in March. So I'm very much encouraged by this RSI indicator situation here and the fact that it didn't fall into oversold territory and you seemingly formed a higher low with respect to the longer term trend. I think that looks really good for the potential for higher prices. And, names like Google, which we've been long since March 7th, continue to coil near the highs. That is bullish price action. On my Apple trade, I did get stopped out, but I'm wondering if that was a whipsaw situation. I'm not, ready to necessarily buy back into it yet. But I'm going to be watching it closely. It does have earnings next week, and so that may be a catalyst for a new bull trend to start in that space. But whether you look, at Apple or Tesla, those are really the only two stocks within the Magnificent Seven that are struggling. You look at Microsoft, higher low, consolidating near its highs. Netflix had that big gap down last week after its earnings, Here too, no oversold reading registered on the RSI indicator. That's a really good sign. Take a look at Meta, higher low, still consolidating near the highs. Amazon, higher low, still consolidating near the highs. These are not topping formations. And we know that these stocks have a major impact, a disproportional impact on the direction of the indices. I want to take a look at crude oil here as well, because I do think a low of significance is completed. And so our names that we've owned for quite some time, like PBF Energy, Viper Energy, and Matador Resources seemingly have completed higher lows with respect to the trend. So this is very encouraging. I've been taking a look at some other names in the space as well, especially CNX Resources, a liquid natural gas play. I know natural gas has been weak, but I think that you have a good risk reward set up with this stock consolidating above resistance. Let's jump over to the cryptocurrency market. We started accumulating some positions in names like MicroStrategy and Coinbase last week. And it looks like we may have seen some capitulation in the cryptocurrency space. Now, we are not out of the woods yet, but the fact that crypto is not breaking down and stocks are starting to bid back higher again is a step in the right direction with respect to risk on, right? I just have a really tough time believing that stocks are going to collapse if crypto is not collapsing first, right? So when it comes to MicroStrategy, we actually put on a long here on the 17th, and we're seeing a nice follow through bid on that. When it comes to Coinbase, that came in the long on the 17th as well. So I'm really encouraged by the price action thus far. I don't want to get ahead of myself here, but we have a really good risk reward entry and even have a position in Robinhood as well. So I don't think I should say that the crypto mania is completed. And that leads me to believe that, bond prices will eventually continue lower. You're seeing a little bit of a sideways price action, digestion of the recent gains or the recent losses, I should say, in bonds. Now crude oil is starting to catch a bid again, so I think you need to be cautious with bonds. And this is going to be the main driver of capital flows in the equity space. So despite tech and chips outperforming today, I don't expect it to last very long. Crypto is kind of its own beast, so to speak, and it's going to do whatever it's going to do. But and you might see tech outperform a little bit in the near term, but over the course of the next couple of months, if bond prices continue trending lower and interest rates continue trending higher, I think it's going to be a really tough environment for tech to continue to outperform. So that's something we need to be cognizant of, because ultimately our goal is outperformance, and that means being strong, being long the strongest stocks in the strongest sectors. A couple other names that I've been watching. I recently put on a position in Boot Barn Holdings, a retail stock with a focus on Western style apparel. I really like the breakout that we seemingly had here yesterday from this saucer formation. So it's rallying to new multi-month highs, which I think is bullish price action and does suggest that you could see some more upside. And of course, I've been talking about Cameco Corporation, the uranium stock, for quite some time. I still like the price action here. It's consolidating nicely within this rectangle formation near its highs. And this is very encouraging. I already have a position on this, but I am entertaining the idea of adding to longs if we can start to clear technical resistance. Now, we're not there yet. And in this market environment where volatility has crept back into the picture, we need to let price guide our actions. You always need to let price guide your actions. But when there are downside risks, we do need to be aware that you can reverse abruptly, and there are major risks associated with that. And I want to wrap up this week's video by looking at precious metals. You saw a pretty sharp sell-off in gold and silver on Monday, but it did continue into Tuesday a little bit, but you did get a little bit of a bid out of that low. And if that is the bottom, it's a higher one, and it will reinforce the existing uptrend. So I still have an upside target in gold in the $2,500, $3,000 area for this year at the least. When it comes to silver, I'd still like to see it hit $34 to $36 an ounce at some point this year. But you take a look at some of the names that we've been talking about for quite some time, and Anglo Ashanti trying to complete a higher low, Agnico Eagle Mines holding up well near the highs, and even El Dorado Corporation showing some resiliency after that pretty nasty sell-off. Now, to just take a look at what's happening in some of the tech names, We've had this name AppLovin Corporation on the books for quite some time. I really like its relative strength here. That is, really barely came down despite that nasty tech sell-off that we had over the last couple of weeks. So that's something we look for in stocks during pullbacks is relative strength. If the stock market is down 5%, ideally the stock that you own, that you screen for when it comes to relative strength, might be down 2 or 3%. Okay. And then when the market bottoms, when the index is bottom and you rally to make new highs, say the market's up 5%, you're holding ideally should be up, 8 to 10%. Those are arbitrary numbers, but I think you get the idea. So that's what I'm looking out for right now. Just to summarize, I'm encouraged by the price action coming out of this low. Cyclical factors and even technical factors, we did satisfy some downside price objectives, are encouraging right now. I like the price action in crypto, but bonds do remain a concern. I'm not sure that stocks can continue to do well necessarily. Now, you look back to 2021, you had crude oil rallying, you had inflation expectations rallying, and stocks continued on to new highs. But I'm still of the persuasion that we need to see stocks rally in conjunction with the dollar to confirm that we are in the late stage of the equity market cycle. And I think we will get that. And in that environment, don't be surprised to see elements of the inflation trade outperform. So that pretty much takes care of what I wanted to discuss today. Thank you so much for watching, and I hope to see you in the TheoTrade chat room.